narrative. However, what has been a welcome distraction, I would say, for investors, at least for yesterday, was this summit that took place between President Putin and President Trump, which at least put some shadow on this trade war talk, which certainly is going to continue dominating in the headlines. And what is more positive for the currency markets is that there seems to be a little bit more improved risk appetite, which means that we're seeing a little bit of a downturn in the US dollar. It might only be temporary. However, this is presenting some opportunities for the emerging market currencies to regain their momentum. Most emerging market currencies across Asia are trading higher. And as I saw in the intro today, even the South African rand is benefiting from the dollar weakness.
Just on that, summit between Trump and President Putin. I mean, what do you make of what happened there? I mean, I was reading an article in the Wall Street Journal where Trump is questioning Russia's meddling. So you kind of have a situation where your intelligence agencies are saying this is the evidence we have and this is what we suspect happened. And then you have a conversation with President Putin and you take his side over U.S. intelligence agencies. Quite bizarre, don't you think?
I'm not too sure what to think of it, to be honest. What I would say is that it looks like a positive thing for investors and for the markets, because when you consider these ongoing tensions between the United States and Russia, and even more specifically between President Putin and President Trump, you've got two major political powers, that it's at least a good sign that both of them were there together at the podium, and that it appears that for the most part, the meeting between them went well, which is a good thing for market sentiment, and it's likely a reason why the stock markets are looking somewhat more upbeat over the past couple of trading sessions, and specifically more this morning, where the emerging market currencies are seeing benefit from improved risk appetite. However, of course, in the background, there's still a lot of political uncertainty, a lot of political risks. So let's see what happens as the time goes on.
We had U.S. retail sales rising 0.5% in line with expectations. What does it say about the health of the U.S. economy at this point?
It continues to point out how strong the U.S. economy is, and it's the divergence factor that's coming into play again. And the United States is extremely beyond its competitors and its developed peers when it comes to both economic growth and also monetary policy on a central bank policy front. And it's why this divergence between the United States and the rest of its developed peers continues to expand further. There's a big distance between the economic recovery in the United States and what we see in Europe or UK or Japan. And it's really saying that the United States continues to be on a podium by itself.
We've started U.S. earnings season. I mean, when you look at some of the banks that publish numbers, JP Morgan Chase, Citigroup, Wells Fargo, what tone does it say about the next coming quarters in terms of guidance and expectations? Are we likely to have a negative impact on forecasts?
This is a very good question to ask, actually. And it's also major headlines from Netflix last night, because Netflix's prices went through a downturn itself, because Netflix apparently does not have the subscribers that expected it would do at this point. However, generally, the earnings have been more upbeat and they've been stronger than forecast now for the past couple of quarters. So we also need to see what the forecasts are for this coming quarter. Of course, there's been a lot of fiscal stimulus in the United States. The tax cuts and other measures that President Trump is really pursuing. So we need to see what impact this is having on corporations. Of course, with this trade war threat that remains and lingers in the background, it would also be really important to see if any of these major corporations put out a statement that, look, we have to monitor these trade war risks as well, because there's economic and market uncertainty. For example, the IMF only yesterday issued a statement that we might need to trim down global growth, and that a Trump trade war could actually cost the global economy $430 billion.
Right. And then on that IMF note, I mean, they're expecting an improved outlook for South Africa and Nigeria, if I'm not mistaken. And they're saying that it'll bolster sub-Saharan Africa's recovery. Considering that we had a weak start to the year in South Africa, that is, which included a contraction in the first quarter, and fears that fears from analysts that the country was headed for a first recession, what would you say would be some of the risk warnings or some of the things we need to keep an eye on when you take into consideration South Africa's economy?
specifically for South Africa and the African region as the trade war concerns. Although South Africa or its neighboring countries, whether that's, in the region Nigeria or Tanzania or wherever that is in Africa, it might appear to be very isolated on the map to this Trump and China rhetoric that's going on in the background. However, the African economy and emerging markets in a whole are very reliant on global trade. So any signs of weakening demand for exports, or there could be less demand for products, could really create headwinds for our economies in this region. And although what we've seen over the past couple of weeks is market turmoil where there's a lot of pressure on emerging markets, the reality is nobody knows what impact this rhetoric and discussions between Trump on trade is really going to have on the global economy until the economic data starts coming through. Just to point out, we had data out from Singapore just a few hours back this morning, and there were signs of weakening demand for exports. And although Singapore might be a more developed economy than South Africa, it does point out how our global economy in a whole is very reliant on global trade, and this trade war threat is a big threat to exactly that, global trade.
All right, Jameel, thanks so much for your time. That's Jameel Ahmad, who's the Global Head of Currency Strategy and Market Research at FXTM.
This is